Are we buying the dip in Coinbase? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Coinbase, ticker symbol COIN. This company just reported their Q4 earnings, and we'll get into them. We'll take a look at the revenue growth. We'll take a look at all the expenses and the cost that this company has, and quite frankly, they flow a lot of this revenue all the way down to the net income. It's really interesting. This company is actually wildly profitable, to be quite frankly, but you wouldn't tell by looking at the stock chart. This thing has been on an epic downdraft really since of November. This stock peaked out over $350 per share and now is currently sitting closer to $170 per share. We'll talk about some of the factors that might be involved in that. Also talk about this from a technical perspective. Is this an area where you can step in here and buy the dip on this one? Now, when we're talking about Coinbase and the fact that the company has come all the way back from a price perspective, you got a $38 billion market cap on this one. When you start using traditional valuation metrics like price to earnings and price to sales, I tell you what, it's not as overly valued as you've seen some of these tech stocks out there that are not nearly as profitable as Coinbase. But here we've got revenue coming in at $2.5 billion. That beat expectations by over $500 million. That was 327% year over year growth. When we get over to the financials, we'll show you that, how you go from 585 in revenue all the way up to this $2.5 billion mark. We'll show it to you how they scaled up their cost as well and how it affected profitability over at this company. Now, what I wanted to look for, because I was like, man, this revenue growth is outstanding. When you're talking about a price to earnings basis, price to sales basis, this company has come back way. I mean, this company was well over $400. It was $430 a share at one time. And I think Kathy Wood was buying it on that day. But when we look forward with Coinbase, what I did is on a site like Seeking Alpha, and there's other ones out there where they'll give you the estimates in terms of our revenue coming up with Coinbase. And so here we are on Coinbase's valuation page. We come down here to annual revenue estimates, and I see in the most recent year, analysts had expected Coinbase to do $7.34 billion. They actually came in a lot higher than that at about $7.8, $7.9 billion. A lot of it had to do with this most recent quarter was really $500 million over estimates. Now, I see for the upcoming year, this is interesting about Coinbase, that they're projecting actually a decrease on that revenue side. So when we see these fantastic growth rates on the press release, and this is what's going to be quoted, especially the bull case argument for Coinbase, is they have this massive growth rate and their valuation isn't sky high or skyscraper high. Whereas when we look forward in the upcoming year, at least to what analysts are seeing, they're projecting a slowdown in this revenue. Now, I would assume that Coinbase will beat this revenue estimate, as most estimates come underneath where the company actually comes in, but they would actually have to beat it by a pretty significant amount to have a really strong growth rate year over year on that revenue side. What I also see is on the earnings per share side, notice that this most recent year, they projected that Coinbase was going to do about $14.67 in EPS. And we see here for the full year on a diluted basis, they earned $14.50 per share. Notice that the upcoming year, they're actually slashing those earnings estimates in half to about 7.21. So that is just something to keep in mind, that yes, the forward price to earnings right now, based on the earnings over the trailing 12 months over at Coinbase, is a 12 forward PE. And some people might argue that's actually pretty good. But notice that analysts are slashing these estimates for the upcoming year. And now our PE will actually double in the coming year if Coinbase meets, or in some cases, maybe doesn't even meet the annual estimates on those earnings. Just something to keep in mind when you see valuations on stocks. It's not always taking the numbers that are on the paper, but we do like to look forward, and we use, especially a stock that's relatively well covered. When you see 10, 15, 20 analysts covering this type of thing, it gives you a good sense that there's a lot of eyeballs on this stock and a lot of research being done to a certain degree. And so if they think earnings are going to be slashed in half, well, then all of a sudden this revenue growth doesn't look that great, because that is going to come in flat next year. And then you're also going to have earnings and margin compression over that. And so, yeah, that is a recipe, and that could explain why this stock has just continued to go down, because these earning estimates with Coinbase and the revenue estimates have been in for a while, and analysts have, quite frankly, have just been crunching the numbers. Now, there's some other things here on the financials that I think are contributing to Coinbase going down, and we'll talk about them. Look, that got wonderful revenue growth, 585 million up to this 2.5. For the full year, you went from 1.2 up to about 7.9. I noticed in the most recent quarter, they did a pretty good job when you have 300% year over year revenue revenue growth, we would expect these operating expenses to really accelerate as well. Okay, you went from 358 million all the way up to 1.5 billion dollars. Okay, you saw a big gigantic ballooning of general administrative expenses, but also technology and development really accelerated. Transaction expenses, we would expect that, but also sales and marketing basically 10x from 23 million up to 244 million dollars. All things being considered though, you match that with equally as strong revenue growth. So you take this 2.5, you minus 1.5, you come down here to operating income of $922 million. That was up about $700 million over the previous year on a quarterly basis, where they were sitting at 222 in the previous period. You see for the full year, same story. You went from $408 million, this is operating income, all the way up to $3 billion. So just take a look at this. This is what I like about this company, and that's why I really am looking into this company pretty in depth for not a sizable investment. I think you can couple like a Coinbase investment with the Visas, the Squares, the PayPals, even your traditional banks. You can just have an entire kind of financial portfolio. I'd like to see you couple Coinbase with like a Bank of America, a JP Morgan, and some credit card processors like Visa and MasterCard. And so look, in that totality, I don't want that many shares of Coinbase, but these are absolutely stunning financials, quite frankly, because off of $2.5 billion worth of revenue to clear to the operating side over 900 million, and after you pay taxes, come all the way down to the bottom line net income, and you're at $840 million. If this company can somehow figure out a way to continue to accelerate these revenues, this is a stock that will find its footing at some point and make not a swift reversal, but if you can continue to grow these revenues, I'm not expecting 300% year-over-year growth. That would make this a heavy buy. You would make this a significant portion of your portfolio, but nobody is predicting that. And I think even the most bullish case can understand how revenues will start to slow. We've got a $3 trillion market cap, I think, on all of crypto. So there's only a certain percentage that we can then kind of carve out for a Coinbase stock. But what is also keeping this stock under pressure is notice that our stock-based compensation in the most recent year on just a quarterly basis ballooned all the way up to 262 million. So off of this $1.5 billion worth of cost, 262 million of it was stock-based compensation. You see last year, just 31 million. Again, a lot of that has to do with they're more recently went public, and so you're obviously going to compensate your employees quite a bit. But as your stock starts to pull back, we've seen this with other stocks that we've covered, like a Fastly, and there was a couple other ones that I can't remember off the top of my head that had rather egregious stock-based compensation. I think Palantir as well. Well, they had to cut that back as their stock started to do a nosedive, and we could see a similar thing with Coinbase in the future, and that also will hurt your earnings per share as well. Although in terms of earnings per share, it does factor in the stock-based compensation as a dollar value. But you also see massive dilution over the last year. You went from 100 million or maybe 100 billion up to 252 on that side. That's more than doubling the shares outstanding. That is diluting you as a shareholder, despite the absolutely fantastic revenue growth that will hurt you in the long run. Now, in terms of cash flows, it's going to look fantastic because we get to add back in $6.7 billion worth of custodial funds held for customers. This is obviously cash flowing into the company, but it's not that their cash. And so I would not look at Coinbase and say, look, they had $10.7 billion worth of free cash, and we've got a $38 billion market cap. For most companies, that would be wildly undervalued. But in this case, it doesn't really make a lot of sense when it comes to the fact that most of that is due to customer funds, not Coinbase's funds. All things being considered, they did add some debt to the balance sheet. I do want to slide over to that. I want to show you that the company does have about $7 billion worth of cash. We have this $10.5 billion worth of custodial funds. This is held on the asset side of the business. The only reason why I would really want that to be a big number is the fact that you have a lot of assets on the platform. And you see in the last year, they had only $3.7 billion worth of custodial funds. You see that went way up to 10.5. So the more funds you have on the platform, it's kind of like a bank. The more deposits, the more you can loan that out, the more people will be willing to trade and kind of do things with their crypto when you have more of it. Obviously, Coinbase being one of the leaders has a very strong position there. They did add some long-term debt, about $3.3 billion. That is new on the liability side, but they have a very strong cash position over this company. Not only that, they have very strong profitability and cash flows, even when you minus out the custodial funds. Very strong company from that perspective. Now, what hasn't been strong is the stock performance, and we are on a mega downtrend. And I'll be quite honest with you, I like this stock. I would like like to be in this stock, and I think it would be an absolutely fantastic investment at some point, but you want to get it at the right price. Now, it's been in this downward channel really since November of last year. I highlighted the upper channel with purple. That's the only line that matters. This bottom line doesn't really matter. It's really what we want to see Coinbase do is actually get out of this upper channel. And we see it did it back here in February. This might have to do with Super Bowl. I didn't get to see their ad to the Super Bowl only because I was actually at the game, and so I did not get to see the commercials, but apparently they had an amazing commercial that drew a lot of attention and a lot of people to the platform. We probably haven't even seen, in fact, we did not see that reflected in the most recent earnings. So we'll see that in upcoming quarters, how much that Super Bowl ad might have played into it, but we had a nice little pop, and then we've come all the way back down here. So why I've put a couple of candles up here is you've got to wait for Coinbase to reverse, okay? And I'm going to be taking my own medicine on this one. I'm going to be wanting to buy this stock, absolutely, but we've got to wait for it to reverse. We've got to get well above this purple trend line, because you see here right after the Super Bowl, the stock did, but there's an area of resistance here, and I'm going to make this red line a little bit thicker. There's an area of resistance now. It was support, okay? 215, 216 on this stock was absolutely support. In fact, once it broke through, it solidly broke through, and then we see this area at 215 is hard to get through. So don't feel like, oh, I got to get on Coinbase right now. It's dipped really hard. Well, your upside is probably back up here to about 215, because we have to assume it's going to get rejected again. We did not see increasing volume on this shorter term uptrend that the stock made. I think this was, again, right after the Super Bowl, but we didn't really see conviction on that volume side. This was kind of a weak rally. That's why it got rejected. And now we're back down here at about $170 per share. What we're waiting for is a sign of a reversal. We saw it here actually with Coinbase originally when this stock IPO'd. It went on a big downtrend, found footing at 215, kind of bounced around, and then started to make a series of higher lows really right here. You had a nice little series of higher lows. You could have bought it here. Technically, you could have bought it here. Yes, you would have had to held down through, but it didn't bottom all the way back out to 220. Notice that, ooh, it rocketed all the way up to almost $370 per share. Now, obviously, if you held through there, you're back down. You're looking to average back in, but you'd like to make the same decision from a technical perspective. A lot of people are super quick in buying the dips. So yeah, you could have bought this initial dip. You could have got it at the same price here. But what's different about this area on the graph in this area is, you guessed it, it's time, okay? Your money is actually less valuable than the time. The time you hold this stock where it continues to go down or sideways consolidation is time you could have put that money somewhere else, likely to better use, to just going down and sideways. We get in Coinbase after it makes a little bit of a rally that gives us higher odds of seeing this follow through and really go to a higher price at a future date. This is patience and discipline. Younger, more novice investors would just simply buy in somewhere along this down leg. The disciplined, the Warren Buffetts, the long-term investors actually, quite frankly, would look for a sign of reversal, but also understand we get a sign of reversal with this one. We're going to meet some headwinds at about 214, 215 per share. You get out above that one, and there's some really clear skies above. You easily could get into the 250s on this stock if you're able to clear through this area on the price chart. But we have to keep in mind that Coinbase's estimates in terms of their EPS and their revenues are basically going to be in line with the most previous year on a revenue perspective. And from an earnings perspective, analysts are believing that Coinbase's costs are going to continue to accelerate faster than their revenues. So you have to keep that in mind, especially when you look at this valuation over at Coinbase. Likely still a little steep for this stock if analyst estimates are correct. Hopefully you guys enjoyed today's video. Back in soon with more. Good luck with your investments.